Hello and welcome back to Longmont Startup Week. My name is Rich Malloy, and we have a great panel here today talking about the importance of building a banking relationship. And so today is the final day of Longmont Startup Week. We hope you've enjoyed the production and all of the panels and the wonderful hosts and guests that we've had so far. Today is the Revitalize Day, focus on capital. If you just missed the session on the importance of community, definitely recommend checking that out. That was amazing. And be sure to go and visit those businesses, Abbott and Wallace and High Plains Bank and 300 Sons. Now here, right now, we have two guests from High Plains Bank that are going to join us. But before we do that, want to remind you that Longmont Startup Week is an entirely free production that our community puts on. And as part of that, making something free is that we have sponsors. And so our sponsors, would really want to thank our sponsors for making this event possible. ARC Thrift Stores, Avocet Communications, Ward Electric Company, and Longmont Economic Development Partnership are our platinum sponsors this year. So thank you so much for the time and energy and money that you put into this program. Our gold sponsors are Biz West, Left Hand Brewery, and Docketley. Our connected sponsors are Downtown Longmont and High Plains Bank, and we're going to talk with High Plains Bank in just a second. And our in-kind sponsors, Handprint Inc., Circle Graphics, Sticker Giant, and Chop 5. So thank you again to our sponsors for making this possible. So without further ado, I'd like to introduce you to John Creighton and Chris McVay from High Plains Bank. Hi guys, welcome.
Morning, Rick.
Morning.
So John is the president and CEO of High Plains Bank, and John's leadership drives the vision for High Plains Bank, a bank grounded in a philosophy and history that few other financial institutions share. High Plains Bank is a community bank, a local bank, a family-run, employee-owned, and deeply connected to families, individuals, and the businesses that it serves. Chris McVay's lending experience includes commercial real estate, small business loans, and he knows that every customer relationship is different than a one-size-fits-all approach to banking. He is a master of creative thinking and takes pride in finding innovative solutions for his customers' unique needs. And we're going to talk about all of that here today. So let's kick this off. John, you don't have a banking background, right? And so let's talk about banking from a non-banking perspective and how that has influenced you and your work.
Great. Thanks, Rich. And first, I want to thank whoever wrote that introduction. That was very nice. And also just want to thank all the entrepreneurs that may be watching right now. I really appreciate how you all make our communities more interesting and push us forward and sort of keep helping our communities evolve. But, as you say, Rich, I avoided banking for many, many years. My grandfather went to work for the bank in 1919, and I was first discussed working for the bank in the late 80s, and I wanted nothing to do with it. And part of it was because what I imagined about banking as I got into banking actually turned out to be true, is that the banking industry as a whole is one of the least creative groups of people that are out there. I mean, they just have these formulas and these boxes, and I didn't want to be of something that was so cookie cutter. I was just talking to my son recently, and I told him that we're looking for a multimedia specialist to join our team, and his response was, "Well, who would want to do that for a bank?" And I think that's a fair question. I mean, it's but what I really love is starting new things. I love experimenting. And so for many years, I ran a research firm. And that was where I first kind of had a professional experience with banking, as I had some good contracts, but slow paying clients. And my customers or my employees felt like they should be paid even if the clients hadn't paid us yet. So started working with the bank, with a line of credit to manage cash flow and do those sorts of things. And then as I, kind of moved into the banking realm and coming from a more entrepreneurial background myself, I realized that banks, in some ways, we give them a strange power as startups and things, because, they have money and they can provide financing. And there's times that as a business, you need that kind of financing. But it creates a really awkward situation because, as you talk to people and you're getting your business up and running, they say you need a banking relationship. And mostly in your life, you think about the bank as the place you got your debit card or where you had your paycheck deposited, or maybe you got a mortgage. But beyond that, they're really part of your life, like the DMV is, because they have to be. And so when we start to approach banks about financing, we might take the sales pitch approach like we would with our parents. We're not crazy, or we take the humble pie approach, which never feels good, or we take the assistant principal approach of, what do you need me to say to get out of this office with what I want? And it's really hard as a startup business to be your authentic self across the table from someone who maybe doesn't really understand what you're trying to do, and certainly doesn't understand the passion with which you're doing it. And it's really hard to try to find the energy to explain yourself to someone who just thinks of you as ratios and what box do you fit in. But it really is valuable to have a banking expert on your side. And Chris at this table is the banking expert. I'm not. But you need someone who understands your passion, but it's also realistic. Doesn't have the rose-colored glasses on. You need someone that thinks creatively. You need someone, and this is really important, a banker who won't panic during the rough stretches, because every startup, every business, even long established ones, have rough patches, and you need a banker who's not going to panic. And you need someone who will be a confident advocate and can tell your story within the bank. So one of the things I really suggest when you're looking for a banking relationship as a new business is approach it as if you're hiring an advisor, as opposed to instead of trying to convince people, will you approve of me? Approach it as, do I approve of the bank?
That's great.
And questions that any bank that you talk to should be able to answer for you is, as a business person, what will you be able to learn from the bank when it comes to financing? And how will the bank help me understand the pros and cons of my options? And, if I'm putting my house on the line, what does that really mean? If I'm, doing a lien on my house? And what is the bank's approach when things get tough? How do they work with the business? And ask for specific examples of how the bank works with businesses during tough times. And then ask, what do you understand about my business? Do you get it? To know what it's like to be doing. And those are the kinds of qualities Chris has, is trying to understand that. But then the other thing is you should really want to have conversations with the bank about, what is your rice and beans plan if things aren't going well? And what's your crash landing plan if things really start to fall apart? Or conversely, what's your plan if you're wildly successful? Because many startups grow broke. They're having so much success that they just run out of cash. And so you need to be able to have those conversations with the banker. And if you have those initial conversations and your banker's getting nervous, maybe not someone that you want to work with. And just real quickly, I just want to emphasize, we're not necessarily the right bank for everybody. The business needs to feel confidence in the bank. And so, but I would say there's a number of community banks in town, and you're more likely to find this kind of relationship in a community bank than in a corporate bank. So I will just do that little plug there. There's Adams Bank and Trust and Flatirons and Front Range and Pueblo Bank and Trust and High Country that are all community banks that I would suggest maybe would get this kind of stuff more than other banks.
Oh, wow. That is fantastic. That is definitely the best. And those are the best analogies that I've ever heard about working with a banker, as the assistant principal, the humble pie, and what was the third one?
Pitch to your parents.
Pitch to your parents, right? I don't know if you guys have read Shoe Dog.
Yeah.
Right.
Yeah.
And in Shoe Dog, which if you haven't read it, it's Phil Knight, the founder of Nike, the story of founding Nike. And gosh, it's such a motivating, moving, powerful book. And in there, every chapter is like, I had to put on my suit and go downtown and beg the bankers. Right. And he hated it. Right. And he hated it because they didn't understand his business and they weren't there for him when times got tough. And he didn't have it, but it was also the 80s, and that was, there was one bank in town. There's only one bank in town that would give him a loan, and it would work with him, right? And now we have options, and so that's fantastic. I love those questions. Those are really great questions to look at your bank as an advisor. So you know, as we've talked a little bit about picking a bank and got some great advice along those lines. I'm thinking also about, understanding the differences of you talk about the community banks and the differences between the community banks and the national banks, right? And Chris, something that you posted a year ago that was very powerful was that, so this is I think a LinkedIn post from a year ago, was we've put another $10 million and counting back into our local communities with round 2 of the Paycheck Protection Program. Many of our loans are under $25,000 in size. And last year, the PPP, showed how community banks really shine. Right? Can you talk to us just, Chris, about the differences, of why that worked for the local banks and it didn't work for the big banks?
Yeah, when the pandemic started, we had a lot of businesses that we had helped. We had got them going, they were growing, and really through no fault of their own, no bad business decision, they were faced with a really tall challenge and in having this pandemic come down at them. So really even before PPP, we basically got our list of customers and said, who's going to need some help during this? Who's going to need some assistance? And right away, before really even the regulator said we could do it, we put a plan in place to say, we're going to give these customers some loan payment deferral to just ease their stress, as we're trying to figure out what this is going to be. And that then evolved into, the PPP program. And I think what differentiated us as a bank is, and being so integrated within the community is we really, I think, deeply care, as the community banks do, about these businesses. We hate to see, empty spaces on Main Street. We want to see thriving business communities, and being able to help those businesses through the assistance of the government was just a huge blessing. So, again, it was neat to be able to see, businesses that are able to keep their doors open because of the assistance that we were facilitating. I mean, it really, it was our money that we were then going to get back from the government at some point. But it was nice to be able to do that. And again, I think it was because we had this care of our downtown businesses, of the businesses that are in our community. And I think part of that stems from our history in that, we started in a small town, and oftentimes, that business owner you're going to see at the grocery store, at church. And so, it's not just, the bank, it's really about the community and how we're trying to help those folks out. So it was neat to be able to do that. John probably knows more of the numbers. He's kind of been dealing it with more on the back end in terms of what we did in total. But yeah, it was really great to be able to see that. And I would say, most of the businesses, I can think of maybe only 2 or 3 that did go out of business that we worked with. And most of that was more of just because of timing and wanting to retire, as opposed to, a failure as a result of the pandemic.
Wow, that is really strong. And were there examples of people that came into that came into High Plains that were not customers before that you were able to help out?
Yeah, so we were, we basically sort of opened everybody with open arms. And so a number of folks that we worked with were, trying to get a bank or trying to get a PPP loan through another bank, had been unable. They had frustrating experiences. And so we were able to actually, put a pretty good plan in place to be able to help, a lot of these non-customers. So I don't know the number in terms of about new customers versus existing customers.
I'd say about 30% to 40% were new customers.
Wow.
That we'd never worked with before.
Yeah. Wow, that's fantastic. And you welcome them in because, this is your job as a community bank, right? Is to make sure that the community is strong and has the resources that they need to succeed.
Well, and I do have to, in some ways this was it's not that we did anything heroic. It's that this was the best marketing thing that could ever happen to us. I mean, it's, why wouldn't you help folks? I mean, it's banks were treated very generously by the government, and to not try to help just didn't make any sense at all. So it was we appreciated the opportunity to do it.
Yeah, that's great. That's great. And I love to hear that it was great stories. I mean, I'm a small business advocate and work with the SBA actually in one of my jobs, and love to hear about how the Small Business Association was supporting small businesses like small banks, and regional banks. So that's fantastic. And I think that really ties into also as you were talking about finding the right bank that's the right fit for you? Were there examples of times when somebody came to you and you said, you're actually not the right fit. We don't have what you need. Maybe you should go check out another bank down the street?
There are times, I would say for the smaller businesses, for the startups, I think we have a really good fit. But, the example we always give is, we sometimes will get asked about auto loans. Well, we typically tell them go see a credit union because credit unions give great rate on auto loans. And so there are times, that we work with businesses and they may, we're a small community bank and they may outgrow us. They may have needs that just exceed what we're capable with. They may have, international, lending or banking needs that may be tough for us. And there could be startups that fall into that category as well that we do. And so, yeah, I think we pride ourselves in being honest and really, again, as you said, Rich, to try to find the right fit for both the customer and for the bank. We find that that's the most successful is when they're kind of working together, kind of towards a common goal. It seems to work the best.
Yeah, absolutely. And, so the flip side of that coin, right, is a bank pushing a product that's not a fit.
Right.
Right. And I mean, this is, years ago, Wells got in trouble for that, and big banks are probably still doing this. Right. And so, talk to me about how you go about figuring out what's the right fit, and how should the people that are watching, we talked a little bit about some of those questions, but how should they be digging in as they're building their banking relationship to make sure that they are getting the products that are the right fit for them?
Yeah. I think, as we talk about sort of as I see the evolution of a banking relationship, for a startup, generally the first thing you're going to need is a checking account. You're going to need something. And oftentimes you're going to the bank that you've probably had your account at since you were a kid. And so you start there, you get your account, and you think you're kind of off on your way. But then over time, you're going to start to need more services. Maybe it's credit card processing, maybe it's payroll services, other advanced features that bank may or may not be able to offer. And then, at some point, hopefully soon, you're going to start to think about, capital and lending needs. And then it's kind of working backwards. Is that the right fit? And so I would, recommend to startups and those that are listening is to kind of start kind of, sort of the holistic approach and ask the questions, what's their experience working with startups? Give, as John said, specific examples of how they've worked with customers and sort of the creative solutions they've tried to create. I think that, when we came into this market 9 years ago, we saw sort of a gap in that what we call customized underwriting, or sort of just basically crafting a product, especially on the commercial side, was only really available for very, very large customers through the large banks. Otherwise, you were basically, looking at an off-the-shelf sort of product that oftentimes bankers, because of incentive goals and those types of things, were sort of forced to push. And where we saw the opportunity was to work with these small community banks small businesses and offer them, customized solutions and really think about and think creatively, and it's from experience we've had working with other businesses to try to find types of products and loans that are going to work. And and we could certainly, if we have time, kind of go into a few specific examples of that.
Would love to hear a specific example.
So a couple that come to mind, one is a business that has been featured here previously, but they came to us with a business plan, and they had gone to a couple of different banks, and, very well thought out, I think very good idea. But we realized, that based on what they were able to present to us and provide to us as collateral, we could only give them a loan of a certain size. And we were willing to make that loan if they were able to go out and raise a little bit more capital. And so rather than just saying, no, we're not going to do this, sorry, we can't help you, we said, you know what, if you can go out and raise a little more capital, we're willing to come and come to bat with you. And sure enough, a couple months later, or maybe it wasn't even that long, they came back to us and said, we've raised, enough capital, and we made the loan, and they've been a very successful business. Another example is just recently we had a newer sort of healthcare business that was looking to lease space. They came to us originally with an SBA loan request to build out their space. We helped kind of work through that process and consult them. And said, this may not be the best fit for you. You're going to be leasing space. That opportunity ultimately fell through, But they sort of started over, and we said, let's put you in touch with a commercial real estate broker, and we can give you a couple of names to give you really an idea of what's out there from other lease opportunities, but also maybe to purchase, given some of the incentives that are happening right now with SBA. And so we actually were able to work with them, and they worked with the commercial broker to find a space, and we were actually able to pair resources from SBA, Colorado Enterprise Fund, and CHAFA, which does some stuff, and typically do a lot of home assistance, but they have a commercial side, and we're really able to put it together a package for these folks to be able to buy their space. And so now, rather than leasing space, they own a space, and they're going to be, growing their practice in this space. And so that was sort of a creative sort of result of knowing what products are out there, knowing, how to kind of work with them together, and weaving sort of this package together. So I heard he's the director of lending for Colorado Enterprise Fund, which is a great resource out there for small businesses. We work with them a lot to help assist where we maybe have a shortcoming. But he told me one time at a small business panel that funding a startup is like, a quilt. There's pieces from all over the place that you've got to kind of pull together. That's great. So kind of back to kind of tying this back to, kind of the title of this is that banking relationship is finding a banker that's going to know what resources are out there to be able to help advise you. And, if that means going to another bank, if that means going to another resource, that bank's, and banker are going to put the customer first and put them in the right position.
Yeah, that's fantastic, right? And that goes to show, right? This is the specialization of labor, right? Chris and John, you guys understand all of the resources that are out there, and the business owner doesn't need to know these things, right? You just need to have the right relationship with the person that is on your side that will advocate for you, and then find those pockets for you. John, thoughts? To add on to that.
Well, what I think about a lot is when we opened in Longmont, and it was just over about 8 years ago. People would ask, what kind of lending do we specialize in? And so in 2 of our markets where we have banks, we're the only bank in the community. So, what do we specialize in? What are our products? What people ask for. I mean, it's, we don't know what people are going to ask for when they walk in the door, and then let's sit down and let's say, do the numbers make sense? Do you have some safety net? How much risk are you willing to take? And are there other resources out there for you? So it really is, there isn't a product that we have per se, other than what people might need. And really try to take that approach. And similar to what Chris said, it's not only are there, there's SBA and Colorado Lending Source, et cetera, there's private investors in communities. And sometimes we'll say, they can provide you a bridge till you're really bankable. We'll take a piece of it. The private investor will take a piece of it. And then the private investor can go away as you get more success. And there are those folks in the community as well who like to help businesses get started. So that's another resource that I think it's probably untraditional for banks to work with those kind of lenders. Or if they do, it's completely separate and they don't talk to each other. But as the business who's doing the borrowing, you want your various people you're working with to be able to talk to each other and be coordinated so that you're not, have one group pull the rug out from under your feet, and when the other one's not. I mean, it can be very disjointed if you kind of don't get things coordinated.
Awesome. I love it. As both of you guys are talking, I'm thinking about, we always talk about in Colorado craft brewing and craft distilling, and now what we're talking about is craft banking, right? And had never really thought about it like that before, but to hear you guys talk about it, it makes it apparent how important that is and what a valuable service that is. So we actually have a couple of questions here that I want to read off here. So here's a good one: is that are there red flags I should be aware of? I'm assuming as it relates to interviewing and talking with bankers and building a banking relationship.
I think it goes back to, when you're interviewing, as much as, they're interviewing you and learning about your business, it's, asking them what experience they have. But, and so, do they have experience? Can they cite specific examples, of businesses they've worked with? But, probably another big red flag is what's the level of interest? Is this, are they really engaged in the conversation that you're having? Are they asking, probing questions to learn more about your business? Or are they, just kind of taking the appointment so that they can, take the application and kind of get to the next opportunity? For me, talking to new businesses and kind of helping them through that sort of early stage when they're, not sure what to do and where to go and who to talk to is probably brings me the most joy in my job. Once we kind of figure out how to get the deal done, for me, it actually kind of becomes a little boring because it's like we've kind of solved the problem, and so I really I really love listening to, to businesses and hear their story and learning from them about, all of the things we've talked about. So I would say those are probably the two biggest is lack of experience and what's the level of engagement. It's funny to see. We've had a few experiences working with small businesses, where we've been working with them for, in some cases, several years, and they finally get to that point where they're open, they're doing their big, maybe it's their grand opening or their chamber ribbon cutting, and then you see all the other banks or a lot of other bankers from town kind of come in and say, "Hey, we'd love to earn your business," and they'll say, "That's great, but we needed help a year and a half ago, 2 years ago." Right. And so, again, it takes, somebody with that sort of entrepreneurial spirit. But I would say, the level of engagement, because you're looking for somebody that's going to advocate for you. Obviously they have to advocate for the bank, but you're looking for somebody that's going to have some interest in what you're trying to do.
Yeah. Gotcha. The other thing I'd add is, I think the biggest issue for many businesses, particularly small businesses, is cash flow. And, we learned that as we headed into the pandemic when your cash flow just stops. Okay, you've got a crisis. But even in normal times, something may happen. They do construction on the road and no one can get to your business, or a variety of things could come up. A batch of your beer goes bad or what have you. And so you have an interruption in your cash flow. And so how sensitive is the bank to those issues? Do they panic easily? And so one really bad month, are they going to shut off your line of credit, which is what you use to manage your cash flow? And then if your line of credit is cross-collateralized with your real estate loan, is your property in jeopardy too? So those are the kinds of things, when you're sitting down with the bankers, tell me about the bad things that could happen. Let's talk through the bad scenarios, because these things could happen. And then the last point I'd make about that is sometimes you need to have that conversation, when do we need to pull the plug on this? When do we need to close the business? And that's something that you should do before you need to do it. So as you're starting a business, kind of do some scenario planning. If this is going on, we're going to close the business so we don't lose our house, so we don't lose our kids' college tuition, and do that before it becomes very, very emotional and your ego's on the line, that you already have some metrics in place that, okay, it's not working the way we thought, we're going to stop. Because otherwise you get to that place and then the bank may panic before you do, or see the writing on the wall, this isn't going to work before you do. And then you're in foreclosure and it just becomes very painful.
Wow. And, I got to say, for all of my years in business, I've never heard that advice before. And I think that is fantastic advice of, plan for that worst case scenario, especially as you're starting out, and think about that now, because you're right. When that time comes, it's going to be so emotional, and ego is going to be on the line, and emotion, but more importantly, your house might be on the line, your kids' college tuition might be on the line, and all of those things. And so the other thing that I see over and over again is that entrepreneurs often don't have just a fundamental, finance accounting understanding, right? Just the idea of cash is king, and employees want to be paid even if your customers don't pay you, right? And so, especially engineers and especially technical folks that really understand the specifics of what they're building, but they don't understand the specifics of the business. And just to hear you guys talk about that, I mean, have you worked with some founders or some startup owners or some business owners that have been along those lines? Brilliant, bright minds, great products, building amazing things, but just don't really understand how finances work.
Well, and maybe they shouldn't. I mean, this is something I've been thinking a lot about lately. Is that in many different aspects of our lives, whether it's banking or healthcare or your mechanic, there's one expert involved in the conversation and there's one novice. But ironically, it's the most important thing going on in the novice's life. And the expert just doesn't want something to happen 5 minutes before 5 so they can go home. But, I would say turning back on the banking industry or the healthcare provider industry or the insurance industry, when you're in the expert role, you have an obligation to share your expertise with people as opposed to trying to make them figure it out, because it's not reasonable for them to try to figure it out necessarily. And so I think people aren't practiced at telling their financial story, as a for instance. And so getting help to be able to tell your financial story, whether it's from a bank or someone like yourself that works with small businesses, that's a hard thing to learn how to tell. And so I would, if I was a startup, if you're not able to tell your financial story, find someone who can help you tell that story.
Great. And along those lines, we have a question from the audience about what should I have prepared before I meet with a bank for the initial meeting?
I think we want to hear your story, so we want to hear your story. We've talked about it a little bit, but, in bits and pieces here, but, we don't need a 25-page business plan. I mean, a one-page synopsis of basically, what are you trying to do? How do you think you're going to be successful? But then also, I think what's really important is, a lot of entrepreneurs will say, well, this is how it's going to be successful, and there's no way we can fail. But I think is being critical about what are the risks associated with this venture, and how, in banks, we're always trying to look to mitigate the risk. So if we can identify those risks and then we can adequately mitigate them, that goes a long way. I think, as to John saying, what's that point, where you might pull the plug, and so being realistic as to, this is the opportunity, this is what we're trying to do. But if we get to this point, we may have to retreat from this position. So, obviously having your financials in order, understanding kind of where your credit is, some of the more basic things. But I think it's helping kind of that story, and being able to articulate the vision, maybe not as much the financing side of things, but is just, the vision. I want to hear somebody that's excited. I want to see somebody that's engaging, but also realistic, that they know that there is some risk there, and, they're asking the bank to share in some of that risk.
Yeah, I'd say the more basic, the financials, the credit, and all those sorts of things, that's for the second or third conversation. Yeah. That's not for the first conversation, because, again, you need to find out if this is a bank that you want to invest the time and energy to pull that all together with before you take the time to do it.
Yeah. Excellent. That's great advice. And so let's talk again about, we talked a little bit about the relationships and the referrals, and, Chris, you had a great story there. What are some other relationships that you as bankers can help your customers with, and to help support their businesses?
As it relates to the finances of the business, I think it's important to have somebody that's going to be able to assist on whether it be the bookkeeping or the tax side of things. And so I think as you're getting started, it's nice to have a resource there. So having a bank that can refer out, partners there. Obviously, some of the other basic legal, that type of thing. But yeah, it's really important as to, the relationships that the bank has and is established, so that they can pick up the phone and say, hey, you need to talk to so-and-so. They're going to be able to help you out. They're going to be able to get you taken care of, as we sort of did with the situation I was mentioning with the real estate agent. We gave them a couple of names. I think the rule is you give them 3, but you say, this is somebody that we've worked with in the past. But yeah, I would say, on the real estate, legal, financing. I know a lot of people love QuickBooks and think QuickBooks is really easy. But I was a treasurer for a nonprofit and I made a mess. I mean, I can understand financial statements, but I made a mess of QuickBooks really quick, and so I would advise, we've seen a lot of folks that are really good at what they do, but they're not great at the QuickBooks. And that sometimes, as the business gets going, can be tough. So that's a good resource. And then other sort of, as we sort of talked about also earlier, other sort of non-traditional lending resources to sort of help with that puzzle of the capital stack. Resources to SBA lending partners, other sort of non-traditional lenders like Cardinal Lending Source and Axiom. I think they might have changed their name, and then also private equity that might be out there.
Interesting. And so let's talk a little bit about financial products, right? And understanding a little bit about that. And so since we have you here and we have your expertise, Chris, where would you like to start with, helping our audience understand some of the financial products that may be available to them that they're not aware of?
Sure. Yeah. So, right now I think we're seeing some other resources that are out there, as related to the pandemic. Right now, SBA is offering some greatly reduced fees, so that is a good resource to check into, and certainly talking to a bank that has SBA lending expertise. They help with lower down payments. They help with, on the bank side, mitigating some of the risk that's there. There's also some products that are out there that are geared. Right now, one that I'm hearing a lot of is called the Climber Loan. I'm getting a lot of requests. We are one of the banks that's accepting Climber Loan applications. This was a fund that was sort of set up by the state to help and assist businesses that have gone through some struggle over the last couple of years. Unlike some of the other products that are out there, this is not a grant. It is something that needs to be repaid, and it's something that requires collateral. So it was really, I think, pushed as sort of an incentive for banks to make loans to customers that they might not otherwise because they've had a bad couple of years. And then they give some assistance to the banks. For most startups, and I've had a number of them that have asked about Climber loans, you need to have had 2 years of profitable or positive cash flow prior to the pandemic. So for a lot of startups, they're not eligible. And unfortunately, that was written into the statute that created the Climber loan. So there's little wiggle room that they can do. But there are other, resources that are out there, and options that are out there. And again, we work with a lot of them. Cardinal Enterprise Fund is one that we've worked with quite a bit. They get some of their financing from SBA direct and then also from other lenders, but they will often work with, sort of non-bankable customers, and then typically they would refer those up to banks. In some cases, we've also partnered with them for gap financing when we might be able to do a certain dollar amount, but we're still needing a little bit to make that equation work, I guess, if that makes sense. In terms of, our products, we really don't have kind of your standard, as John said earlier. We do lines of credit, we do term loans, we do equipment loans, those types of things. But it's really kind of, looking and digging into what the business needs. And, obviously, there are some sort of old school banking rules of, lines of credit should be used for short-term needs. The same as, you wouldn't typically go buy an automobile with a credit card. You would get a loan to buy an automobile. And so sometimes businesses, struggle with, when do I use a line of credit versus maybe getting a term loan for things. And so there's a lot of products that are out there. I would say I would shy away. There's not as many of them out there. There used to be a lot of lines of credit that banks would give, based on a credit score, and do very little digging into the business. And then as often as the business got in trouble, those lines of credit would go away. And so you're seeing less of those because they were risky. But there's lots of different options that are out there. And again, I think it's, finding that bank that is going to be able to talk through and look through the different options that are out there.
One of the things I'd add is just as your business matures, becomes more successful, you become more stable. As Chris was mentioning, then other banks are saying, we'd love to earn your business. The one thing I would amend to what Chris said is, I think you should probably have the conversation with them. That, we love long-term relationships with our customers, but in the interest of your business, it's good to know more than one banker. And know more than one bank. And we do live in an environment where banks get sold. I will be clear here that we have no intention of doing that. And, we're in it for the long haul. But we are in an environment where banks get sold, and the purchasing bank may have different interests. And so the kind of lending that you got originally disappears. We've seen that. We have some history with agriculture lending, and we're seeing that in several of our markets. A large corporate bank buys the small town bank, and they no longer want to do ag lending. So then where do people turn? So having multiple relationships may make sense in some cases. What we encourage people to do is just be transparent with us that you're doing that, because then we can work with you. And so we've had people come to us and say, we've gotten this offer from another bank, and we say, I would take it. And you can reduce your costs and go for it. And if you need us again, we're still here.
Wow, great. So along those lines, we've got a question from the audience here of what rookie mistakes should you avoid when talking to a bank?
I think it kind of going back to where we started is to walk in and feel like that you have to be able to answer every question that they have, and that if they treat you as if you should be a financial expert in your first conversation, finance is not your business. That's the bank's business. So asking them, you tell me, what are the things I need to understand about finances to get this started, or that I need to move forward? Because, banks, like every other industry, we have our own language. I mean, we've used some of them here, term, line of credit, that people may or may not know what those are. And so don't feel like you need to be an expert, and don't feel like any question is stupid. And it's just like being with your doctor. I don't know. You tell me. And so that's what I would suggest, is not to be intimidated in a way that that you give them, the banker, power that they don't deserve, and ask them to share their knowledge.
Yep. Great.
The other thing I would add too is if there is something going on, if you've had a hiccup with credit or you've had a few other things, oftentimes we don't find out about those until later on. For some lending institutions, some of those things, a bankruptcy, some of those things can be a non-starter. And I think it's just being, honest, like you would with your healthcare provider, about what's going on, so that they can prescribe the best solution, for what, that business is needing. And so I think being honest, which can be tough, admittedly, especially if it's that first meeting, but, a lot of that stuff's going to come out sooner or later. So it's nice to be able to kind of get it out on the front end, and then try to figure out how do we, work around some of those things that might be out there that, they might view as sort of a, something that might keep them from being able to have a successful banking relationship.
Yeah. Awesome. Cool, guys. Well, we've got a few minutes left. What didn't we cover that you feel like that, we want to make sure that, we share with the audience here today?
I think that particularly if it's a startup and if you're just getting started, it's being really clear with yourself about how much risk do you want to take on. And that's going to be a different answer at different points in your life. I started my first business when I was 23. That was easy because I had nothing to lose. But, then you have kids. I started my second business a week before my son was born. That was a lot tougher because there's a lot more at stake. And so just being really understanding both you and your family, what are you able to sign up for at this point in your life, and are you prepared for that? And so do you have exit strategies before you ever get started? So if I could go back to my 20s again, I'd be taking a lot more risk. But just not at that point in my life.
Yep, absolutely. Chris?
I think, kind of for me, it kind of goes back to the community. I think in centering, our bank about how we're working with the community, and also, for me, it's, think about, this is Longmont Startup Week. How is your business impacting this community? And what are you kind of bringing? We're kind of rolling out a new thing here at the bank called Thriving Communities, and as part of that, we want to see thriving businesses within our community. But we realize that it's a sort of a all kind of strung together kind of jumbled mess, and it's, so how is your business kind of, think about that, how is it contributing to the community? What is it doing? And kind of piggybacking on some of the earlier sessions, how can you sort of involve the community in what your startup is doing? I think is neat to see for me. I love to see sort of the communities that are, they're hiring people, they're bringing people into our community, they're employing people. It's just awesome to see.
Wow, that's great. Yeah, Michelle did an amazing job of just sharing community stories from High Plains Bank. Okay, with the last few minutes we've got left, we're going to do a little thing called Longmont Lightning Round.
Okay.
All right, you ready? So first, favorite restaurant in Longmont, obviously.
Rosalie's.
Babette's.
Oh, all right. Rosalie's is a favorite so far. Favorite spot on Main Street or downtown?
It's probably sitting on the patio at Rosalie's, front or back.
Yeah. And it's starting to come back now. I just love on a Friday night walking up and down Main Street and just seeing so many people. When we moved here 20 odd years ago, there was mostly pawn shops on Main Street. And so to be able to walk up and down Main Street now just gives me a real boost, and going to Dairy Queen or Scrumptious or all those places.
Yeah. Main Street has changed even in the last 5-6 years. Even definitely in the last 10 years since I've been in Colorado, for sure. Okay, favorite spot in Longmont, not downtown.
Well, I can take that one. It's the second week of July near Thompson Park, and watching the Longmont Crit. Best event in Longmont. It's a day-long thing where you get to see professional bike riders, and just love it.
Great.
It might sound cheesy, but I honestly love, being downtown, having our office downtown, and being able to work with all the businesses, to be right downtown, as John said, to be able to see all of them. That's probably my favorite place to be, aside from, sitting in my backyard, on my porch.
Yeah. Awesome. Okay. Well, that is all that we have the time for today. John, Chris, thank you both so much. I learned so much today, I've got to tell you, and I hope everybody watching did as well. I want to remind everybody that today is the last day, and so today for Longmont Startup Week, today at 4:00 is the closing night trivia party at 300 Suns. So please join us at 300 Suns today at 4:00. And coming up next, at the top of the hour, we will have leveraging state and federal funding resources. So thank you all for attending today, and we'll see you in a little bit.